So, hello everyone, good morning to all. Just confirm me once in the chat box that my voice is audible. Good morning, Manoj sir. So, welcome you all once again on the platform of Batuk Academy. And today we all are here to discuss on a very important topic, on a very important area, I can say, that is income tax. Okay. And this is the rebirth of income tax. We can say the new Income Tax Act is here. Income Tax Act 2025. And today we all are here to discuss the changes which is there in new Income Tax Act with comparison to the old Income Tax Act. Okay. And this subject is very special for all of us because income tax return is an essential submission which every business person has to file, and we should ready with the new changes, upcoming changes, so that we can maintain our services, we can provide the best services to our client. Okay, so today we have CA Ankita Bothra to discuss the changes which is there in new Income Tax Act with comparison to old, and also ma'am is going to share with us multiple practical things, practical insights related to the new Income Tax Act 2025. So sir, you all are ready for the discussion. Today this session is on Zoom as well as the session is live on YouTube as well. So if you want to watch the recording, in that case the same will be available on our YouTube channel as well, Learn with Batuk. Okay, so thank you all for joining this session. CA Ankita Bothra has already trained more than 4,000 professionals across India related to the income tax matters. Okay, and she has taken many webinars on our platform as well. She has authored numerous articles on income tax, and the same is available on our website Batuk Consultancy, so you can check it. Okay, so this income tax is very important for us, and today we are going to discuss the practical insights of Income Tax Act 2025. Sir, are you ready for the discussion? I just want to see your excitement because sir, income tax audit 2024-25 done. Now we have to focus on 2025-26, and this is the opportunity we all have. Hence I am also here, as I am a GST speaker, but I also want to learn something from the perspective of income tax, so I am also here. So we'll start our session. Ankita is also here to deliberate the practical insights of Income Tax Act 2025. Okay, before we move ahead, I just want to share with you one important information. Ankita has written, or I can say Ankita has authored a very special book on Income Tax Act, and this book is completely based on practical approach. Okay, in this particular book, what she has done, she has provided various points, and in points she has covered the complete Income Tax Act 2025 in a very simplified way. Okay, so I am just going to share with you the QR code of this specific book. You can scan this QR code and you can download this book from our website. Okay, so if anyone wants to download the book, just click the image in your phone. You may download it post session. Okay, this facility will be available. So thank you once again all of you for the registration. Now I am just going to hand over the proceedings to C Ankita, and we hope today we all will learn a lot of things from the perspective of Income Tax Act 2025. Thank you once again. Welcome to you, ma'am.
Thank you. Thank you so much, sir. So, hello everyone. How are you all? Good morning. So, today we are discussing changes related to Income Tax Act 2025 versus 1961. So, what are the changes we are here discussing as simplify as possible? So, for that, let's begin with the first. I will share my screen. So hope you will able to watch my screen. Can you please confirm in chat box?
Yes, it is completely visible.
Okay, fine. Okay. So thank you so much everyone for this. Let's begin the topic. So here we are discussing Income Tax Act 2025. So first we have to understand why the need of R for 2025. So the already Income Tax Act 1961 over there, but now the Income Tax Act 2025, which is applicable from 1st April 2026. So we all know the Income Tax Act 1961 is applicable and started from 1962, which is almost 60 plus years, and every year we can see a number of changes in through finance bill. So there are a number of amendments, and there are a number of circular provisions, sub provisions, and things will be added, and that's why the whole thing is too bulky. So now we have to focus, like this is very difficult to keep all the things in 1961 Act. We all read this, but it's very difficult to that. For simplification, now the new act, the Income Tax Act 2025 comes in a picture. So this is the way the idea of the new act will be emerged. And we have to discuss what is the major changes in this Income Tax Act 2025. So first, I hope you understand that why the need of or requirement of 2025 Act. So the three main point which is work on that Income Tax Act 2025 is simplification, modernization, and transparency. So what is this simplification? So now you know that there are there are number of provisions and circulars, notification, amendments day by day, year by year. That's why the act is bulky and it's very difficult to cope up all the things. For simplicity, and there are number of provision which is repetitive again and again. So for simplicity point of view, the overhaul of Income Tax Act 2025 is happen. So the simplification, I hope you understand that. And there are now, in earlier years when the Income Tax Act 1961 comes in a picture, there are there are not such digital things. We are maintain our books of accounts in a not in a digital form, but now the all things are digitally. So I hope that is the thing, like there are requirement, and we have to go in a digital era only, with all the preservation of books of accounts and everything on in digital form only. So that is the why there are requirement to add all these things in act itself. That is why the things will be required, and it will be comes in the Income Tax Act 2025. And you know what, the this is the very important and very debatable topic, like virtual asset, cryptocurrency, which is now is future in our India. In Western countries, that is also over there, but now in India also there are specific rule for cryptocurrency in act itself. So Income Tax Act 2025 says about taxation of virtual assets and all the things. And similar, there are where the asset in comes in a picture, like we can see taxation on capital asset and capital gain had. So there are specifically added virtual asset where, and the provisions related to assets with the virtual asset added in this Income Tax Act itself. So this is the way the things will be modernized for the for this era, that is requirement of the R, and that's why these things will be in a Income Tax Act 2025. And the third thing is a transparency. So you know what, earlier there are provisions of assessments, and the things like appeals and everything is a manually, and there are certain things which is beyond our control. So for better transparency and for better result that is required, you have to be there are certain things added in Income Tax Act itself, faceless assessments and all things. So more and more focus on faceless assessments in this particular Income Tax Act 2025. So this is the way the three wheels on that the Income Tax Act 2025 is emerged. So I hope you understand that. And if any query regarding that, so you can put in a chat box. Otherwise, we can move ahead. And now you know what, the final assent in August 2025, and this act is come in force from 1st April 2026. So here the first year is implementation is 26-27. And there are first and most important thing, which is always confusion comes in our mind, assessment and year and previous year, which is gone. So now you can see the word tax year 26-27. So now the assessment year and previous year, you are not able to watch this word after the implementation of Income Tax Act 2025. So now you can see the wording tax year this year after the implementation of this act. So this is the way that the key changes, and now we can move ahead. And this is all things. Now we can see that what is the changes. I will just create a simple 10 points related to that. So here the Income Tax Act 2025 is actually the sections in Income Tax Act is actually less number, but you know that when words going, there are the word will be half of the word which actually in a Income Tax Act 1961, because there are number of provision which is actually repetitive in nature. But in Income Tax Act 2025, the provision which is repetitive will be reduced, and they can delete it that proportion, and only the relevant portion is over there. So here I think this is the misprint, and here this is a 536 is in Income Tax Act 2025. So this is the way the sections will be 536 in Income Tax Act. So in Income Tax Act in 2025, there are 536 section and 536 section, 23 chapters and 16 schedules. So all the things are in a 23 chapters and a 16 schedules only. No need to check any other thing like notification, circular, provision, all will be deleted. Now you have to focus on these things only. So this is the simplification portion of Income Tax Act 2025. Now you can see that the most important part, the new terminology used is a tax year instead of a previous year and assessment year. So because of this, there are certain provisions will be change. So when you go through the Income Tax Act 2025, the link or the link of that book is already we can share with you, or you can take a screenshot, you can take a scan of that, and you can get benefit of that. And you can able to see that Income Tax Act 2025. So when you go through these, we actually in that Income Tax Act 2025, we have to as simplification as possible, because when you read with their act, there are difficulties. Maybe it's difficulty for you, but if you read with the simplification, the portion which we provided you, that is very easy to understand, and we can cover all the aspect related to that matter. So here, there you can see there are number of provision will be changed related to that matter because of change of tax year instead of previous year and assessment year. So this is very important to understand when you practically implement the things, and when you practically do all the things, and all the applicable all the things from next year onwards, then you have to able to understand what is the importance of changes of this previous year and assessment year to tax year, because there are certain provision in act itself where this words previous year and assessment year used. Now there is only a tax year. So that is very important to understand. And there are, the definition portion is also in a scattered way. There are a definition of different kind of the words will be in a Income Tax Act in a different chapters or different provision. But now all the definition, maximum number of definition in the chapter of definition only, and the things will be over there only. So it will be easy to understand and memorize the things. No. Tax year means January to December, April to March only. This is the same financial year, April to March. So we can say for 26-27, 1st April 2026 to 31st March 2027. This is the first tax year when the Income Tax Act 2025 is applicable, and we can use the word tax year. So I hope you understand that. Okay. So next is, we already know that the new tax regime is a default tax regime for everyone. If you want to change that, then you can change it with using certain provisions. But this is the things. So if you want to change that, then there are requirement of fill one form before filing your return. So which is actually the transition is by step already in earlier years. The things will be already in our mind that there are certain new things comes in this way. That's why in past 5 years you can see there are default tax regime, new tax regime, and many other things will already comes in our act in 1961 itself, because the transition is smooth and easy, so everyone can take this. And similar way, the digital asset taxation, we already know that cryptocurrency and everything, we all, this is the future of money. Actually, this is the future. In future we can more and more think heard about this virtual digital assets, cryptocurrency, and everything. So earlier there are no provision for related that, there are not applicable, and that is not treated as an asset. But now in act itself, it's a mention in a asset category, virtual digital asset or a cryptocurrency in a separate mention. It's specifically mentioned in an act itself. And taxability is a flat rate, 30% flat rate of virtual digital asset. No other expenses allowed, only the cost of purchase is reducing, and you can give taxation on a virtual digital assets. So this is the way digital asset taxation will be happen. And there are major change in TDS and TCS provisions. There are scattered things. So so what happened here, what, there are scattered thing in related to TDS and TCS. Here, what, this is the thing, like earlier there are different provisions of TDS, like 192, 193, 194A, 194Z. Now the simple two provisions and things will be in separate subheading were there, but the provision, the sections in only one, where the first is related to salary and other is other than salary. So this is the big change related to TDS provision. Yes, Mr. Shiv, we will provide the link at the end of the session, so you can wait till end. Okay, so we'll provide the link for at the end of the session, so you can you can screenshot you can scan the same. Okay. So next thing is a faceless compliance. So what is the what, earlier everything assessments will be happen, this is transition will be happen in over the years, but now this more focus on a faceless compliances only. So now more and more faceless assessments, appeals, and scrutinies are happen in the major cases. The more 90% of the cases will be handled through faceless, so transparency will be increased. So this is the way that these things will be majorly changes in a Income Tax Act 2025. Next is advanced ruling and dispute. So there are changes in advanced ruling and dispute resolution panel. So there are new things will be happen, and new things will be added in the particular this topic. So we will discuss in detail as well in a later part, but once I can give you an overview and the things related to majorly of this. So next is the startup and ESG incentive. You know what, earlier the startup deductions is in a specific up to 24 or 25 year. Now this is extended till 2030, because we are more focused on for a startup and for a digital India, for a startup for startup India. Our prime minister is also more and more focused on this. That's why the deduction on startup is also the timeline is also increased. So we will discuss that as well in a later part. So this is the way whole things will be covered. And next is a rationalize of penalty. Penalties provision is also scattered in a different provisions of income tax, but now the separate chapter for penalty and the all penalty cover in that chapter only. So that is easy to understand. That is the simplification of that penalty provision. So now you have to see the major penalty in a one chapter only. So either you are a student or a tax professionals, you have to go through that particular chapter only. No need to check each and every chapter to understand to penalty penalty provisions. So now all the penalties related to in a particular chapter and all the things in a one place. So it is easy to understand and easy to maintain this. So this is the way the whole things will be happen. Now the no major no the all things will be one and the same, but these all are the changes which we already discussed. Now what we will do, I can create a table. So in this table you can able to get that like what is the sections majorly, we all know. So as we already saw that there are, we have to if you are practicing in income tax area, so you have to remind each sections. Now the problem is like if you are is business and profession head, the section will be in a 28 to 44, but now the number will be changed 26 to 66. So this is the changes will be happen in 2025 act. So I know it take time to remind all the sections of 2025. So I will try to make the maximum of that particular section which will be useful for you day to day basis. I will take a I will create a table for memorize things. So you can see like up to section 6 all the section will be same one and the same in 1961 and 2025. But now after see this house property income, here the numbering will be changed. There are numbering change. What is the changes we will discuss in this session only, so you are able to understand what is the major changes in all these provisions of income tax. But here I'll just take a table, create a table for your reference, that these are the numbers for related to this, and this for particular income from salary, house property income, business profession income, capital gain income. So number will be changed, you can see, and you can take a, if you want you can take screenshot, or otherwise we will provide this particular this PDF will be provided to you, so you can take and read this and keep in mind with this all these things, and this all are changes, so you will able to understand that. This is I will create for your reference perspective. So I hope you understand that this much. Any query you can put in chat box, we will discuss in session in between the session only. So now you have to see the I can give you overview changes related. Now I can detail and give you a detailed understanding related to changes in 1961 versus 2025. So what is the major changes? What is the key point will be keep in mind when you are doing practice in income tax act, income tax. So you will able to get the understanding, and when you if you are a student, then it is benefit for your exam perspective. And this is very important, especially for student, because if this is applicable in youth, so it will be actually add on of 15 to 20 marks in your exam perspective. So it's very important to focus more and more on a changes in 1961 versus 2025. So see, this is the section 2 definition. So we already discussed that majorly all definition will be in a one part only, and there are new terms added in a definition portion like digital asset, tax year. So these new definition, new points will be added. Language is a simplified, redundancy removed, modern terms will be added, and this is the thing. And what is the more key point we will discuss I will create a separate note for there, so we will discuss that as well. But once I will take this all. So now you can see section 3 is taken talk about the previous year. So now this word previous year and assessment year is gone. Now the only word used tax year. So tax year, because there are certain there are too much confusion on the previous year and assessment year. So there are no such confusion now, only the word used when tax year, like similar to financial year. What is the tax year is 1st April to 31st March. So this is the tax year. So we can use that word only. The year, tax year means the year in which particular income related. Like if we talk about tax year 26-27, so whatever income you earn in a tax year, it will be the calculation related to that tax year 26-27 only. So this term is used for to avoid any kind of confusion and related to this. So this is the way the things will be added for previous year, assessment year, and tax year. Any query related to tax year, you can put in chat box. So this is the key word, and this is very important. And you can see this word, and it will it will chances you can confuse when you actually practice the things in related to that particular point, because there are confusion where there are, because the previous year, like if we talked about this particular previous year 25-26, the assessment year is a 26-27. So now what happened? Wait, huh? So the tax is a pay. The tax is a pay at the tax year is a real, I know this is the confusion comes in amount. Assessment year is the year in which we pay tax, but there are no such things now. Pay with that related to that tax year, we can pay tax on particular due dates. So this is the things like the know what for previous year and assessment year we can assess in the previous or of this earlier we can use, like we can see previous year 25-26 assess in a 26-27 assessment. But now 25-26 tax year, if we use tax year for 25-26, will be assessed on the date of the due date for particular date. So now know this word use. So it means the current year, or it will be specified every time. It means current year. Yes, it will be current year only. Current year, 25-26 tax year. It's tax year 25 to no specify every year. This is the time 25-26. So we can use different word previous and assessment year, which will that will be removed. Now we can use only tax year 25-26. That the due date for tax year 25-26 is 31st July for non-audit cases. These the things will be used. No need to use like assess in a 26-27. 14-26 to 14-27 is a earning year as tax year. Then filing year called as no, this is create confusion. You can use 14-26 to 31st March 27. This is 26-27 tax year. Then filing year called as a tax year only. We can use the term tax year 26-27. Okay, fine. I hope you understand that. Next is a residential status. So basically, okay. So basically, residential status, there are, so much confusion on this part. So as simplification as possible, they are over there in a residential topic, and we can say residential section 6 of for Income Tax Act 1961 as well as 2025, which will, there are no as such big changes, but pure clarity related to what is the especially for global citizens, digital workers, and also if you are going living India for salary perspective, there are wording changes. For simplification, things will be over there in residential status. So you can see if you are go through the in detail, there are no such changes, but there are changes in wording. Simplification will be over there. So if you are go through that, then you are able to understand what is the changes related to this particular residential status. It will be create confusion when we go through, because there are scattered provision in Income Tax Act 1961 related to the particular residential status. But when you go through the 2025 Act, as simplification as possible over there, and the new term will be added related to global citizen, digital workers. Yeah, this is the create confusion many of time. Like if you are if you are the Mr. X who is work for who is doing work from home for the Dubai based company, so now what is the residential criteria for that particular person, and what is the how to create how to tax, whether the tax will be calculated on global income, and if it is calculated, then whether what is the consequences of tax treaty related to that person, and how the income will be calculated, and what is the proper rebate will be allowed for that purpose. So these all are clarity, especially in related to this matter. So this is the way things will be over there related to particular residential status. So more clarity given on particular these, especially for global citizen and digital workers, a person who is doing work from home for that particular different kind of organization which is establishing out of India. So these things will be changed more and more. And next is section 9, income deemed to accrue or arise in India. So the as such, these all are the same, expanded to include digital person presence, virtual business operation, and now digital, more and more focus on digital economy. There are chances the company is registered out of India, but he's selling the product, which we already these things already in our Income Tax Act 1961, but the clear cut provision is not over there. So 2025, there are clear cut picture related to this matter, particular digital economy. If you are if your organization is registered out of India, but if you are the particular user in India, or particular things over in India, these all are provision is explicitly added in Income Tax Act 9 2025. So these things will be changes in related to Section 9. And now you can see Section 17, salary definition. So the more and more, these are the major thing which will be added in related to that, especially for ESOP perspective. There are few changes related to ESOP for deduction on for startup. So for startup, we will discuss in detail these things also, and remote work benefit and modernization to reflect new work models. So this is the things will be changes in this particular point. So now you can see, so this is the thing we changes. So we here you can see the definition point. What is the majorly changes? So assessment year, here you can see that this word will be removed, and now the tax year word will be used. Assessee, any person by whom tax or other sum is payable under that, retain with clearer language. Same things, but kuch like a digital taxpayer will be added, deemed residents will be added. So these things will be added in specially SSC. SSC earlier the person, the list of the SSC, these things will be not over there. Digital taxpayer, deemed residents, these all are not over there in a definition of SSC. But now new terms will be added in a definition of SSC. And in income, there are also added income related to crypto, virtual digital assets. So these things will be added in a definition of income. And also person, definition of person, these added a digital entity, AI managed trust. So these things will be added because the era of digital, and the act is more and more focus on a digital perspective and cryptocurrency. These things will, and faceless assessments. These are the major changes in a 2025 act, and these are things which will be more and more focused. So these things will be enough changes, and the definition of person, digital entity, and AI managed trust, which will be added. And the next things is a previous year is omitted. And a company include foreign digital corporation with significant economic presence. So this will be added in a definition of company. Virtual digital asset, this will be newly added. Cover crypto, NFT, other blockchain based assets, digital platform, recognize e-filing, faceless assessment, and digital notice. So these all are the definition will be changes, simplified, and few things added in this particular definition. So we will actually what is the majorly changes we will cover. Not possible to cover entire act in a one go, but here I am trying to cover what is the major changes in a 1961 versus 2025. What we I'm trying to cover all the things in this particular session. So next we can see the summary of key differences for perquisite to specify employee. So you know what, there are definition for specify employee in 1961 as well. So the you know, this is the definition is over there. Directors or more than 20% whole shares, or salaried employee which income is a more than 50K. So if these are the criteria, that is treated as a specified employee. And for that, if the limit 50 more than 50,000 perquisite, they have to full taxable. But now up to 4 lakh, actually this is not mentioned in an act, but there are separate notification related to this matter. Like if up to 4 lakh rupees perquisite for employees, so for employees, that is not taxable, that is exempted. And 8 lakh for medical treatment abroad. So this is given in a separate notification, that is not mentioned in Income Tax Act 2025. But for your reference, for your practical aspect, this is important. That's why I can cover over here. So I hope you understand that. Whatever the query related to whatever we discussed till now, you can put in a chat box. And next we can understand the related to the this is specially related to house property head. So there are certain wording changes in a house property head. Earlier year, the use when we taking benefit of like vacancy allowance, or we can say, so there are use may be occupied, will be able to get benefit of vacancy allowance. But now the thing is, you have to more and more, the instead of maybe occupied, that is occupied. It means if the house property is actually occupied for any part of that particular tax year, then only you will able to get vacancy allowance, or you will be able to get considered as a you can take benefit of vacancy allowance, and you can get benefit of that. If it is not utilized, not occupied for a single day in a particular tax year, it will be big change. When you practically implement the things, that will be related to big change. So when you are practically implement the same things, that will be create the wording will be changed, and the reason and the idea behind of the changes is more and more taxability provision applicable added, and the things will be more the more revenue will be collected in perspective, and more the transparency will be happen. That's why these the confusion word will be removed, and the more and stringent word will be used. So maybe occupied in place of is occupied is over there, related to particular house property. So wording property which may be occupied for the purpose of business or profession for 1961, now use property which is occupied for the business purpose of business or profession. So allowed potentially or intent to use to claim exemption from house property, and now require actual physical use for business to claim exemption. So this is the big changes. Now you have to see and you have to practically implement the same thing. This is related to vacancy allowance, and these all are the different provisions. And for that, you have to focus on these words, which will be important to understand. Any query related to this, and I hope you understand the example which I will give in. Like if it is not used for part of the any part of year, now you are not able to take benefit of vacancy allowance. I hope you know that what is the important of vacancy allowance. The vacancy allowance, like you have to take benefit of two houses in a particular if you own more than two houses, then up to two houses will be considered as a your self-occupied, and remaining you have to be pay tax, whether it is actually let out or not. You have to pay tax tax as a house property income, as per expected rent, or the term which will be, we can say, the we have to pay tax on it. But now these things will be changed, and earlier if we are planning to actually let out that property, but that is not happen in that year, we will take benefit of that vacancy allowance for additionally. But now it is not possible, because the provision will be stricter comparative to 1961 Act. So you have to more and more focus on these type of provisions, which will be important and which will be create issues for you in a future perspective. So this is the way things will be changed. This is the one property and two property. There are certain confusion related to that. Earlier, you can take benefit of up to two property, but there are certain provision which will be removed in Income Tax Act 2025. You don't need to prove that particular property you use for yourself, for your family member. Just straightforward, you are able to take benefit of two property, and up to two property you don't you can consider as a self-occupied property. More than two property, you can you have to mandatory property considered as a let out property, and you have to pay tax on it, whether it is vacant or whether it is let out. That is not relevant over there. So this is the big changes related to income from house property. And now we can see the changes in related to section 28 of the Income Tax Act 2025, and the section 31 of Income Tax Act 1961, which is related to income from business and profession. So there are changes related to section related to this rent, repair, insurance of business asset. So here you can see the a language is modernization to remove ambiguity. So certain things, there are certain provisions which will be in a different portion, which will create confusion when we read the bare act itself. But now the things will be a clear and straightforward, that this particular things will be removed, which we can already read, and we can see these things will be when we see the judicial case laws, and when we consider all the things, then we comes to conclusion this. But now simplification will be happen, and all things will be directly in an income tax act itself. So these things will be, we already read in somewhere like in a judicial case laws or notification or circulars, but now things will be in an act itself. So this is the example of simplification, like this changes will be directly comes in a act itself. So like insurance now explicit previously when you go through the case studies, then you understand that risk of destruction and not just damage. So these are the not part of whatever the amount you receive from as an insurance proceed will be not is considered as your income, but the based on the case laws and based on the things will be added in with this will be just a come through by notification or by amendment. Now this is specifically simplify will mention in an act itself. So these things will be mentioned over there, whatever we already read that things, but these all are specially changes in 2025 instead versus 1961 act. So GST input credit must be excluded from asset, reducing depreciation base. Digital asset now have defined cost rules. So digital asset like crypto, NFT, software license will be added in a digital in wherever the word asset will be used in an act, there are digital asset will be added over there. Cryptocurrency, software license, particular rules for that, how to calculate it, how what is what value will be reduced from that, what is the rate of taxation for that particular digital asset will be in mention in act itself. So particularly the provision related to digital asset will be added in a income tax act 2025. Faceless assessment required clear documentation of asset acquisition and valuation. So so you have to be proved and you have to give all the document related to asset acquisition, valuation, and everything, whether it is faceless assessment or a regular assessment. But now the more and more things will be focused on a faceless assessment. So now you have to provide all the things. So the things will also changes related to maintenance of account. So here you can see the section 35 of Income Tax Act 2025 versus Section 44 AA of Income Tax Act 1961. We have to remind these things. Section 44 AA for maintenance of book, 44 AB for particular that for audit perspective. But now the section will be changed. I know it's a bit difficult for to memorize in a one go, but these all are the things, and we will conducted a session for particular each and every aspect. So if you are interested, you can enroll the same and you are memorize the to entire Income Tax Act. If it is possible for you, we can share the we can plan a session for complete Income Tax Act where you can memorize all the sections in go. So this is the way the things will be changes. Section 44A for Income Tax Act 1961 versus Section 35 of Income Tax Act of 2025. Here the things threshold limit will be changed. You can see the threshold limit is this for 1961, and now the threshold limit is this 2.5 lakh and 3 lakh. And professionals is also, there are certain professional will added. Yes, definitely, Mr. Vanshal. We will provide that with you. This PPT will be shared at the end of the session. So no need to worry about that. And next thing you have to see that professionals covered. Now this is cover digital professional, influencer, freelancers. These all are covered in a Income Tax Act. So these more and more focus on these digital professionals, and all things will be is in over there. Okay, so next thing, prescribed books, this is one and the same, but now digital will be digitally maintained. This is also allowed. And audit linkage. And now you have to see, this is the things, penalty provisions. So now you can see that penalty provision in a one go, all penalty will be mentioned in a single chapters. Here you can see this will, the link will be given over there, and the limit will be, see, this is the things, the penalty will be doubled now. So these are the number will be changes. So you have to see over there what is the changes and what the things will be this way only related to this particular section. And now you have to see this this, the new section will becomes in a picture, presumptive taxation for non-resident in a Electronic Income Tax Act 2025. So these are the key changes related to, and the more and more focus on particular in this portion, the new changes related to the special presumptive taxation for non-resident in related to electronic manufacturing introduced in section 44 BBT to attract foreign expertise, non-resident offering services like chip design, automation, embedded system to Indian manufacturing can now offer presumptive taxation, avoiding complex audit and documentation. So this is very important, and this is related to if you are dealing with a non-resident or if you are a student, then it's important what presumptive taxation scheme added in Income Tax Act 2025. So you have to check it out this, and this is the applicability. This is not such provision related to that in this 1961 Act, but in 2025 Act, this is applicable for non-resident providing services technology to Indian electronic manufacturing. New targeted scheme, presumptive income rate 25% of gross receipt deemed as an income. So this is the way things will be added in related to this. Regular tax rate applied on net income. Earlier, tax rate will be regular tax rate, whatever the tax rate applicable on that non-resident will be applicable. Now effective tax liability 10% on gross receipt. So this is the things will lower compliance border. Tax rate will be changed and allowed based on actual, no deduction allowed, no set. So in presumptive taxation scheme, you know what, there are flat rate taxation system, no need to maintain proper books of account, no need to deduction, separate deduction allowed for expenses. Whatever the income prescribed percentage will be treated as your income, and you have to pay tax on a fixed rate on that particular portion. So this is a way presumptive taxation scheme for non-resident, first time added in Income Tax Act 2025. And this is for promote ESD, electronic system design and manufacturing in India. So this is for specific sector specific boost. So these things will be added in Income Tax Act, and this is very important, and this is very crucial to keep in mind these type of things. And next is a gift from lineal ascendant and descendant. So now there are changes in a gift from lineal ascendant and descendant as well. So in the Income Tax Act included only the individual's own lineal ascendant and descendant. Now in Income Tax Act 2025 includes both the individuals and spouse, lineal ascendant and descendant. So expanded exemption scope. And for that, I will give you example as well. So gift from parents or children's allowed. Gift now, earlier it will be gift from in-laws, spouse, parents, taxable, not considered relative. But now the new exemption will be allowed, exempt, now consider relative. So this is a big change related to gift from lineal ascendant and descendant. Gift from a relative will be exempted. So now the spouse lineal ascendant and descendant is also added in this list. So this list will be increased, and it will be beneficial for everyone. So please check it out. This gift from your own parents, grandparents, children, grandchildren remain tax-free under the 2025 Act. Gift from your spouse, parents, grandparents, children, grandchildren are also exempt. So this is big change related to this gift from lineal ascendant and descendant. So please keep it in mind, and please watch it carefully for practical perspective. Next thing is a clubbing provision. So you know what, this changes related to clubbing provision is spouse income from concern where individual has a substantial interest. So if not clubbed, if spouse, so if, earlier if the spouse income will be considered in a husband's income, but only if he has a particular qualification, then this income is not clubbed. But there are not requirement of qualification now actual skill and experience. If we able to prove that spouse has a particular skill and experience related to that matter, then the income will be considered in spouse income. No need to proper professional qualification, only skill and experience. More and more focus on a skill and experience in Income Tax Act 2025 related to clubbing provision. I hope you understand that. And next is related to deduction for eligible startup. So now the limit will be extended till 31st March 2030. So 5-year extension is given in 2025, which is beneficial for all startup business. So it is good for them. And earlier the limit is March 31st 2025, but now the incorporation window will be increased till 2030. So it will be good for everyone. Next thing is a same but clear. No, earlier, business type is innovation, development, scalable model. Now the new things will be added, clarified to include digital and tech-based model as well. So here, as and where you can see the Income Tax Act 2025 more and more focus on a digital and digital these things, digital asset, digital because we are in a digital era, and all the things will be happen in a digitally. So more and more focus on these word digital. So now if you are a tech-based business, digital related models, you have to able to get benefit of this. So this expanded the scope of startups, and these things will be one and the same. You have to take a DPIIT registration and for a eligible startup. So these things will be related to that. This is the alternative tax regime for 1961 versus 2025. So here the thing will be same, but now one thing will be added here. Here you can see the introduction in 2019 for new manufacturing company retained but sunset date not extended beyond 31st limited. New in 2025 manufacturing corporate society. Now there are certain changes in related to this. This is the introduction in this is the same 115BA 115BAA. New things will be added because this is not as such use. This is related to this digital opt-in and faceless compliances will be what they are related to this. And this is related to, this is also till 31st March 2024 only, and limited future applicability. And this is the 45 BAE new in a 2025 for manufacturing cooperative society, and at 15% apply to society established on or after April 1st 2023. So this expanded the scope of related to this matter. So domestic company continue to benefit from 22% and 15% consistent rate under 115BAA and 115BAB, but new manufacturing company must commence by March 31st 2024 to qualify 115BAB. Now residential cooperative society have two options: 115BAD 20% for existing society and 15% for new manufacturing society set up after 1st April 2023. So for this is benefit for residential cooperative society. All regime require forfeiture of most deduction and incentive must be updated in a via digital filing. So all things will be digital only, filing will be digitally, and assessment will be faceless. So these things will be happen. So this is the important changes related to this matter. And now penalty provisions. Earlier we already discussed that there are penalty provision in a different head. Now all penalty provision is in a one go in a single chapter. So this is very good and very important to understand that now you have to be simplify in a penalty provision as well. Next thing, updated return. So what happened here, the major and the key changes related to that in a updated return. But here you can see the wording assessment year and tax year. So this is very important to understand that assessment year is a different and tax year is a different. So now if we use 25-26 in for 25-26 current assess previous year, and assessment year is a 26-27. So for that I'm just giving example because the tax year word is not used till now. That word is used in Income Tax Act 2025, but I'm just giving you example that here the word is assessment year and here the word is tax year. So assessment year and tax year is a different thing. So maybe it create a complication and it create issues in the future. But here the year will be changed. Earlier it is 24 months from end of assessment year for updated return. Now the limit will be changed up to 48 months from the end of tax year. You have to update your return, extended by 2 years, but practically it's not 2 years, because if you are going with wording assessment year is different and tax year is different. So if we talk about 25-26, if we considered as a tax year, and if we consider it as a previous year, then assessment year is a 26-27. So plus 2 26-27 28 29 29 30, up to 30. But now the limit will be for tax year. And if we consider tax year, then 25, 26 only. So this is the way things will be changed. But now we are not focusing on that, because this is the complication will be comes in the future. You have to be ready. There are chances, but the things you have to very clear about that. Now you are not think about assessment here. The only wording used is a tax year. So you whatever the confusion in here, the in act itself, it is as simplified as possible, that you have to focus on tax year only. So now the limit will be extended for 24 months to 48 months for updated return. So whatever the tax year you have talked about, if you talked about a tax year 26 27, so plus add 48 months from that time, end of the tax year 31st March 2027, to add 48 months, it means 4 years. So that is the your up to that time you can update your return, and penalty will be increased for that 24 to 36 month, 36 to 48 months. These will the new penalty tiers will be added, and these things will be changes from Income Tax Act 2025 perspective for updated return. I'm just giving example. There are no confusion. You have to keep in mind, but this will be the confusion comes in our mind, but that is very simplified and very clear cut, that you have to focus on tax year. No need to focus on these things, because we will read and we can understand Income Tax Act over the year related to this. This is difficult to go out from that, but you have to now think about that much only. So this is the things will be in related to this matter. And now you have to see, this is related to power of valuation officer to estimate the value of so this is change related to escaping assessment related to what is the changes in 1916 1 versus 2020 25. So earlier, you know what, there are 3 years from end of assessment year, and here the word will see, I can use the word assessment here. This is wrong. Here the word is a tax year only. So this is the confusion will be faced by us, but this is the thing which we have to be taken care of it, that tax year, the word will be over there only. So now earlier we can use 3 year, now 4 year, 3 months for that. This is also changed. So related to this 1961 versus 2025 for reassessment, the window will be changed by 1 year. And also in substantial cases 10 years window, which will be reduced till 6 year only. So now till 6 years from tax year only. Here nowhere you can see this word. The limit will be increased, but the limit in this basic window, but in substantial cases the video, because it's very difficult to keep to for that. So it will be up to 6 year only. This window will be for if your 50 lakh plus if your income escape income is more than 50 lakh, then that case is earlier it is 10 year, but now it is 6 year 3 months only. So these things will be understand, and it's important to keep it mind. So this will be things will which we have to understand, that this limit will be changed. And yeah, pre notice inquiry, yes, this is the same thing. Cooling off period, this new things will be over there also. What is the cooling off period? So now you have to understand that whatever the you have to 1 year cooling off period, especially for reassessment. Like earlier what happened, the initial assessment will be happen, and immediately you get notice for reassessment. But now 1 year cooling off period is mandatory before the completion of assessment. 1 year cooling off period were there. So before 1 year 1 year period, you have to be cooling off period given over there in a act itself. There are no such given in a 1961 act. So it is very important, like this will the new feature for reassessment procedure, 1 year especially cooling off period over there. And all things will be fully digital, faceless. So these things will be changes related to reassessment procedure, and this will important, and please keep in mind related to this matter. And now we have to focus on a changes in notice of demand for startup employee on perquisite. So earlier what happened, notice of demand period for ESOP taxation. So within 48 months from end of assessment year. So no, for startup employees, there are ESOP taxation system different rule. If you are a startup employee and you will get ESOP, then there are different rule for you. I hope you know that. So there are limit will be changed over there as well. So earlier it will be a 48 months. Now it will be extended till 60 months related to that. and more flexible tax payment timeline, support to ecosystem. These all are the things will be changes related to this. And block assessment related to search matters. So there are certain changes related to that. Here you can see the in undisclosed income list, there are added virtual digital asset. So at the time of search procedure, if you get a virtual digital asset, that is also considered as undisclosed income, and that is also will be assessed in a block assessment after search procedure. So these things will be added, like virtual digital asset, and these things will be added over there. And time limit will be one and the same, only this instead of 6 months now use of 180 days. So these smaller changes which is for related to this subject matter. For simplification, these things will be happen because sometime it will be create confusion. That's why more and more places the days will be considered in Income Tax Act 2025 instead of months in play months, because that will be more clear cut picture. Days will be more clear cut considered, because there are some day where the days will be 30, 31, 28, different. So that's why there the more and more provision, there are changes which will not possible to cover entire thing, but whatever the major things will be, we will cover over here. But these things will be very important, like 180 days extension will be over there. So this is the thing will be changes in a 2025 itself, and we have to focus more on this, and for simplification perspective. Next thing is include all undisclosed income during block period, clarify treatment for income based on books and declared undisclosed income, limited revival. So these all the things will be one and the same in 1961 versus 2025. The major things will be handling multiple searches. So here the some changes related to if your assessment could overlap. So in 1961, what happened if more than one searches will be multiple searches sequential? What is the sequential handling of multiple searches? So what happened if more than one search assessment will be over there? So how the treatment will be happen in 1961 versus 2025? So in Income Tax Act, there are complexity over there for handling of the multiple searches. But in Act 2025 itself clearly mentioned sequential handling of the first come first serve basis, the mandate sequencing handling of no overlapping allowed for especially for 2025. And there are certain so here the whatever the pending the particular block period, any assessment will be handled, all will be merged and single block assessment will be happen for that. That is clearly mentioned in 2025 Act itself, and this will be very important and very crucial. So this is the things will be changes in related to that. And there are if certain clear caused litigation explain, like these things will be, we can see in a legal case laws and notification now is clear cut mention in Act itself. It will clarified, it is simplified, it is easy to understandable, all things will be in Act itself. Now a time limit for completion of that multiple searches will also changes. This is the 12 month from the end of month of last search, and here 12-month from end of quarter of last search for better time management. This is the big change here, the end of quarter, here the end of month. So time limit for completion is also changed. So this is big change related to this subject matter. So please keep it in mind. And this is the things for exam perspective. And if you are handling all related to this assessments related to block assessment, this will important, and this will be you have to be keep it in mind. So changes in TDS on salary. So what is the changes related to salary provision? So here you can see there are provision in section 192 for TDS on salary in Income Tax Act 1961 versus 392 in 2025. And there are certain things changed, like previous year assessment. Instead of that, we can use tax year at the time of payment of salary, deduct TDS at the time of actual payment at average rate. So here the new word comes in a picture for 2025, average rate based on annual estimated salary for tax year. So here you can see in Act 2025, there are the word use average rate, not mandatory to comply every month for what is the you can consider average rate based on your annual estimated salary. The tax rate will be calculated, TDS will be calculated on that average rate only. So it is very important based on your estimated salary. So in the year, starting year itself, your employer will be calculated what is your annual estimated salary, what is and based on that your average rate will be calculated, and based on that TDS will be deducted. So it's important. It's a big change related to salary provision. So please keep in mind, earlier it was not the same, but now things will be changed. So please keep in mind related to that. And next thing is similar rate but simplified non-cash perquisite average rate method for ease. So now you can use this average rate method is instead of slab rate. So these rate will be changed in a TDS in a salary portion. So these things will be changed. And treatment of perquisite non so this is the things here you can see treatment for. So the things will be easy and simplify in Income Tax Act 2025 instead of 1961. So these all are the changes related to this subject matter. Documentation requirement, employee declaration needed for exemption, prescribed documentation and evidence require, and reduce ambiguity. So these all are changes related to 1961 versus 2025 in a salary portion. Now you can see in a TDS other than salary, multiple sections 94A, 94C, 94J, all will be consolidated in single section 1394. So no need to mention all the section what is in cover in 94A, 94C, 94G, all the provision in a single section 394. So all will be covered in this 394 only. So you have to particular like on interest, there are separate threshold limit, there are separate rate, that is different thing. But now no need to no need to memorize the different kind of section. Just you have to memorize like particular insurance commission, the threshold limit, this rate, but no need to remind the particular section related to this. So this is very important. Now you have to see the only single section 394 for Income Tax Act 2025 in for TDS provisions. So this is other than salary. So this is very important. This is big change related to TDS provision. Next, related to TDS on income from securitization trust. So here there are separate rates for individual and HUF, domestic companies, foreign companies, non-resident. Now there are flat 10% rate for individual investment investor. These all are changes already in a for budget 2025, and this is actually comes in a picture in a 20 Act to 2025 only, and this is also this is discussed in a budget 2025 already. So this is effective from 1st April 2025 on this things. So these things will be clear wherever this is the happen. We will mention this in this provision as well. So this is the way the flat 10% for residents, resident investor, and non-resident tax as per applicable rate 30% of DTAA rates. So this will be things will we have to focus on. And now we have to understand that TCS rate. So what is the big changes in TCS in related to there are section 194Q and also there are happen TCS also. So there for confusion, this is very confusion. So there are removal of that particular section. Both TDS and TCS apply. TCS at 0.1% on sale exceeding 50 lakh, and plus TDS by buyer if the turnover is more than 10 crore. So here the two provision in a by a single person. So that's why these things will be happen. And now the TCS provision will be removed. Only TDS provision over there. So this is the thing. 50 lakh per transaction aggregate only, then TDS provision will be, if the payment is more than 50 lakh, then the TDS provision will be applicable. So this will big change related to this 194Q. And these things will be already comes in a picture in 2025 amendment. So this is important to understand. And there are certificate for lower TDS rate applied to all payment liable to TDS digital. Now you have to be see the if you want to earlier what happened, if you want to benefit of lower TDS rate, then that is specially for specified payment only. Now it is applied for all payment. If you are able to get benefit of lower TDS, then you have to apply once. You can able to take benefit for all payment for TDS reduction. So this is important to understand, that apply for all payment in 2025. So it is for simplification. It has happened in TDS, and similar thing happen in TCS as well. So TCS, for that also you can take benefit for you can apply for one for lower TCS rate, and you can get benefit for all. So this is the thing. Penalty provision in one place in all go. Division of other orders. Under the 1961, the senior tax authority had the power to revise order of subordinate authority within 1 year, but there was no explicit guaranteed minimum period invoking for making the decision. And the 2025 Act keep the same power of revision within 1 year, but now explicitly ensure that once a revision process begin, the authority must take at least 60 days before passing the final order. So there are here the some changes related to revision of orders. So this is the things will we have to keep it. You have to keep it mind when you are practically doing the things. I will give you example related to this as well. So assessing officer is being revised. So if assessing officer is revision because the particular order is aggregate by revenue, then they can division order passed by them. So there earlier that is there are no such time limit. So in hello everyone, am I over? So my voice is audible now? Please confirm. Okay, fine, fine, fine. Thank you so much. So sorry for disturbance. I don't know how it's happened, but I will sign out. Sorry. So let's do. We'll begin now. So now where we are, so here I can give you example related to revision of order. So what happened here in Income Tax Act 1961, there are the commissioner could revise the order anytime within 1 year with no fixed minimum time to consider or communicate before the revision. But in 2025, after the revision process start, the commissioner must wait or take at least 60 days before issuing the revision order. For example, if stay on the order of hearing take 15 days, that does not count. The remaining time must be at least 60 days to ensure proper consideration. So it's very important and it's very keen to understand that this is for benefit for us. So my screen is not visible. Okay, fine. So is it visible now? Please confirm. Okay, fine. Okay. So this is I hope you understand the provision of revision and what is the changes in 1961 versus 2025 for revision of that income tax order. So earlier there are no such time limit for waiting for response or waiting for the SSC to consider these by the revision orders. So there are time limit in 2025 for 60 days related to this matter. So this is important changes. Okay, fine. So I hope you clarity on that. And next thing is the removal of provision related to various faceless scheme in this chapter. This is the thing you have to. There are number of special mention in different kind of portion of Income Tax Act 1961, which will be removed, and in a one go, that the more and more focus on this faceless scheme. So that is removal. That is the thing. Immunity from imposition of penalty. So the changes in 1961 versus 2025 related to penalty, there are certain changes. So under the 1961 Act, the taxpayer must apply for immunity within 1 month from end of month in which assessment order or reassessment order was received. After receiving the application, the assessment officer had to decide on granting or rejecting immunity within 1 month from end of month in which the application was received. So now what happened here? In 2025, the taxpayer must still apply for immunity within 1 month from end of month in which the order is received. However, the time given to assessing officer decide on immunity application has been extended to 3 months from end of month in which the application was received. So earlier the time limit is 1 month for the assessing officer to decide whether the immunity will be given on imposition of penalty or not. Now the time limit is extended to 3 months related to immunity from imposition of that penalty. The extension aims to allow more time for thorough consideration and fair hearing, addressing practical challenges taxpayer face with earlier shorter time frame. So these are the things related to 1961 versus 2025 for imposition of penalty. So the immunity for imposition of penalty. So these things will be important and you have to keep it in mind. So next thing is changes in prescribed authority for imposition of penalty 1961 versus 2025. Yes, we will provide PPT in end of the session. Please wait till at the end of session. So you don't need to worry. We will share this PPT with you. So let's finish up. It's more. It's take 5 or 10 minutes more to conclude all these things. So please wait for 5-10 minutes more. Okay. Next is a change in a prescribed authority for imposition of penalty 1961 versus 2025. So here you can see the major two selected penalty for default of TDS or TCS. There are changes in a penalty. The authority changes. Instead of joint commission, now assessing officer can do this imposition of penalty. So this is the thing you have to keep in mind. Next thing is yes, you will get the recorded session. You know, this is actually live streaming on YouTube, so you can get that access on a YouTube on our channel. But to consultant, we can provide the link as well with you, so you can see over there. Okay, so this is available on our YouTube channel. So next thing is a failure to furnish ITR after search will be a non-cognizable offense. So there are changes in related to 1961 versus 2025 offense, non-cognizable offense. So earlier the punishment will be the time limit of punishment will be changed, and here also requirement of prior approval require in mandatory approval require for 2025, mandatory prior approval from higher authority before prosecution, and also punishment time limit will be changed. So this will change related to search will be after for a non-cognizable offense. So this will be changes related to this matter. Power to call for information under the 1961 Act, the income tax authority could call for information or document related to any sum exceeding 1,000. This limit applicable as a threshold to prevent unnecessary inquiry into very small amount. So now under the 2020 Act, this threshold will be increased to 10,000, reflecting inflation and the need to focus on an administrative effect on a more significant amount. So that's very important. Earlier, only for 1,000 rupees the information will be happen, but now the limit will be increased. You know, the obviously money value will be increased, so that's why the 1,000 to go with 10,000. So this is the thing. Power to inspect a register of company. So earlier you have to see assessing officer and specify officer can power to inspect these registers of company. Now assessment units, verification unit. So now at the era of faceless assessments, there are three different units: assessment unit, verification unit, and so now they all in Income Tax Act. On that time these things were not over there, but this is small point which will be create issues at the time of implementation the same. So now in Act explicitly provide power to that assessment unit, verification unit for that particular inspect of registered of that company. So this is the thing will happen. Now you have to understand that this functional approach, centralized inspection primarily by assessment officer, now distributed inspection with the specialized unit, technology and faceless impact. So earlier it was limited provision, now it is more and more emphasizes on digital access, faceless processes. So these things will be more and more focused on in 2025 Act of that. And now you can see computation of arm's length price. So there are certain changes in this provision itself. So here earlier we can see we can take back, we can consider arithmetic mean of comparable prices, but now your determination of arm length price via rule based approach, not fixed arithmetic mean. Do not go with the arithmetic mean. You can more and more focus on a rule based approach, which will be clear cut mention over there. And next thing is handling multiple comparable. And now you can see earlier we can use arithmetical mean for arm length price, but now we can more and more focus on a rule based method. We can go with a rule based method for every year. We cannot go with the arithmetic mean. So it is very important. It's a key change related to this. And earlier multi-year application not provided. Now ALP decided can apply for 2 consecutive succeeding years. So this is the things will be changes in 1961 versus 2025 for arm length prices. And there I can give you example also. So now you can see in 2025 the ALP could be determined by the median mode or sum weighted average rather than default to arithmetic mean based on an economic reality. So more on the thing will be we can go with the rules, economy, reality. This will be more focus on a arm length price. So this is this change modernization transfer pricing rule under the 2025 Act by enabling a more principled and flexible determination of arm's length price, reducing ambiguity and enhancing alignment with global transfer pricing standard. So this is the things will be more and more focused in a 2025 Act. So I hope you get clarity on all these provisions. Now we can see the new tax regime for registered NPOs. This is big change related to non-profit organization, non-trust. So earlier there are scattered provision for that, and there are too much confusion related to this particular point. Now here in particular this thing is in a chapter 17 part B, there's this separate sections and for that particular registered NPO, and here you can see the separate and clear cut and simplification for registered NPO, trust and NGO will be given over there. There are few changes in the things, but now you have get better clarity and understand to these all are provision in one go go in a simplification manner. So in 2025 Act replace the term trust with NPOs to encompass trust, institution, university, and similar entity under a single category to simplify and streamline provisions. So various scattered provision under multiple section in 1961 are consolidated in a single dedicated chapter in 2025 for easier compliance and clarity. So this is very important and very good for everyone to simplification to understand all the provision related to NPOs, trust and NGOs, which will be create more confusion in 1961 Act, which will be now is a very in a single go we can understand these provision and in with a simplified language. So this is the very good and very important thing related to this matter. Registration and validity. NPOs must apply for re-registration upon any modification or objective. So here the changes related to re-registration upon any modification of objective without the previous requirement that modification be inconsistent with the original terms. So if any changes related to this, then you have to apply for re-registration. And registered institution partially or wholly financed by government or local authority now require mandatory registration to qualify tax exemption, whereas this was not explicitly emphasized in an older regime, or we can say 1961 Act. So here you can see when you read this, then you older regime and newer regime. Older regime is mentioned in 1961 and newer regime is a 2025 Act. So there are certain changes related to this, but more or less these things will be same, but now more clarity, more simplification in 2025 Act related to this subject matter. So these things will be given, and there are also validity of registration for interest income less than 5 crore will be increased to 10 years instead of 5 years. So this is also a big change related to this subject matter for this. And taxation of income is also this, and there are certain changes related to the 15% mandatory investment required on unspent income under the old tax regime. Old tax regime is, we can say, 1961 provisions will be removed in a new tax regime, means 2025 Act, whatever the provision will be related to this subject matter. So these things will be changed. So now we have to be focused on these things. So in summary, the 25 Act modernized the taxation framework for NPOs, trust, NGO by consolidate all provisions, extending the registration validity, introducing specific tax rate on certain income, easing compliance and revising donation tax treatment, and strengthening clarity and oversight mechanism compared to 1961. So I hope I can cover entire things related to 1961 versus 25. So this is the QR code. If you scan this, then you can able to purchase the you can able to purchase this thing, and I will actually share the link for that PPT. Wait, I will share the link. So using this link, you can able to download. So using so when you go through this link, you can able to get like you can actually so using this link, you can be able to get this particular PPT, and also you can give feed. First, you can give feedback related to this, and you can using this QR code, you can purchase the Income Tax Act 2025 is a simplified manner. So if you scan this QR code, you can able to go through the direct website of but to consultancy. So you can get and purchase that particular product. So if you have a good session, and if you enjoy the session thoroughly, and if you able to get the good knowledge, then give a proper feedback on a form which will be given in a chat box, and also where you can get this link, you can get
So once again, thank you everyone for joining the session. I hope you all have enjoyed the session. You all have learned a lot of things from the Income Tax Act perspective. Ankita has explained a lot of things related to the Income Tax Act, and we all have gained a lot of knowledge. And yes, today, CA Ankita has launched one new book on Income Tax Act, and the link, the QR code to buy the book has already been shared with all of you. So just avail the opportunity, place your order right now so that you can get your PDF file, your ebook by today itself. And yes, this is a very special book for all of us because this is completely based on summary of the new Income Tax Act, the changes which is there, and the comparison as well. So thank you, ma'am, for joining us for the very special session. And thank you all the participants for joining the session.
Thank you
And
so much.
yes, we have shared the feedback form. So I request each one of you, whatever will be your feedback, just share it. And yes, we'll meet in another workshop, another webinar, another session. Yes, post session, the PPT will be shared on your registered mail ID. Yes, recording will be available on our YouTube channel, Learn with Batuk. You can check it. So thank you once again. Bye bye. Take care. We'll meet you soon.